recent developments, Chinese chip enterprises are experiencing an unprecedented wave of closures. As of December 11, 2023, approximately 10,900 chip-related businesses in China have been deregistered or had their licenses revoked, with over 5,700 closures occurring in 2022 alone. The year 2023 has seen a sharp increase in the number of Chinese chip company closures, averaging about 30 closures per day. This phenomenon has garnered significant attention to China's chip industry. Media reports indicate that since 2019, over 22,000 chip enterprises in China have been deregistered or revoked, with 2023 marking a historical peak in closures. Analysts suggest that the intensifying competition in chip design, semiconductor manufacturing, and wafer fabrication equipment sectors is leading to fiercer market competition in China. Globally, the chip industry is undergoing a downturn, influenced by factors such as U.S. interest rate hikes, a decline in the consumer electronics market, decoupling, and overall industry downturn. The World Semiconductor Trade Statistics forecast that the global semiconductor market size will reach $520 billion in 2023, a 9.4% decrease year over year, indicating significant challenges and a potentially slow recovery for the global chip industry. According to data from Choice by East Money Information, as of November 1, 2023, 151 publicly listed semiconductor companies in China disclosed their Q3 reports, totaling about 352 billion yuan in revenue, nearly the same as the previous year, and about 19 billion yuan in net profit attributable to the parent company, a 54% decline year over year. Of these companies, 111 experienced a year-over-year decline in net profit, accounting for approximately 74%. The chip industry in China is also experiencing increasing internal competition. For example, chip designs, supported by government incentives, there were over 3,200 chip design companies in 2023, with more than half earning less than $1.4 million annually. Wei Xiaojun, a professor at Tsinghua University and head of integrated circuit design at the China Semiconductor Industry Association, stated that most Chinese chip design companies are expected to suffer widespread losses in 2023. The industry is facing severe inventory backlogs and market saturation, with diminishing competitiveness and inevitable losses over time. Chinese chip companies are struggling with sales due to market oversupply and a generally sluggish semiconductor industry caused by the overall economic environment. Most companies are in a loss due to unsold inventory. A significant part of this problem is attributed to misplanning by the Chinese government. In 2021 and 2022, authorities anticipated high sales due to the work-from-home trend triggered by the pandemic. Many companies produced an excess of chips. However, as the pandemic receded and demand dropped, the market experienced a sharp decline at the end of 2022 and the beginning of 2023, resulting in unsellable inventories that are now depreciating in value. Another issue is the lack of investment, particularly for small companies lacking resources for continued investment. U.S. restrictions on investing in China's semiconductor, AI, and quantum computing sectors, along with European investors' reluctance to invest in Chinese chip companies under U.S. sanctions, have impacted the sector. Major companies are seeking alternative paths, such as Huawei, which has established a secret network of wafer factories. Yangtze Memory Technologies, a major Chinese semiconductor manufacturer, was added to the U.S. trade blacklist in December last year, prohibiting it from purchasing U.S. equipment for chip manufacturing. The company has since spent billions seeking alternative suppliers and purchasing third-party equipment to maintain operations. Chen Nanxiang, chairman and acting CEO of Yangtze Memory Technologies, stated in June this year that the U.S. ban on exporting lithography machine parts to the company has left it without essential components, with no alternatives for domestic replacements. He added that the company's challenge is not just the inability to purchase advanced equipment, but also the unavailability of parts for existing equipment, rendering them nearly inoperable. Peichen Liu, director of the Industrial Economics Database at the Taiwan Institute of Economic Research, in an interview with Radio Free Asia, pointed out that even major firms like Yangtze Memory Technologies are unable to secure the necessary equipment and parts for production. This confirms the view that China's semiconductor equipment heavily relies on imports, with the pace and quality of domestic advancements falling short of expectations and impeding the progress of mature and advanced processes. In the semiconductor production process, China heavily relies on foreign technology at almost every step, technologies primarily controlled by its geopolitical rivals, Taiwan, Japan, South Korea, and the US. Dai Jiyan, deputy researcher at the Taiwan Institute of Economic Research, noted that developing a system comparable to the US based on the existing chip architecture is extremely challenging and not just a matter of having the right personnel. He believes that China currently lacks top-notch IC design companies. For IC design companies to develop high-quality chips, they require excellent foundries to fabricate them. Currently, these opportunities seem entirely blocked, with chip design tools unavailable in China. Under US sanctions, Chinese chip manufacturers can only achieve up to 14 nanometers at most. Previous reports stated that Beijing is preparing a 1 trillion yuan subsidy plan to invest in the semiconductor industry, aiming for chip self-sufficiency and countering the impact of US sanctions. However, industry insiders believe that China's semiconductor industry, already at a disadvantage compared to global leaders, will fall further behind due to sanctions. The subsidies are considered inefficient and unlikely to bridge the technological gap. Leslie Wu, a Taiwanese semiconductor consultant and vice president of the ESG department at China's Jinghong Gas, commented that without foreign technology, China's semiconductor industry would need at least 20 years to close the current technological gap. Wu stated, "Catching up is impossible unless newcomers pursue it at all costs and persist for decades, even if investments yield no profits. This is almost impractical." The Chinese government has always promoted chip independence and invested heavily in it, but analysts believe that in the globally integrated semiconductor supply chain, technological independence is a delusion, unattainable even for the US, let alone China, which lacks competitiveness in many supply chain segments. If the Chinese government truly aims to become an AI superpower, its dependence on foreign chips will only increase. For complete independence, China needs top-tier design software, capabilities, advanced materials, and manufacturing technologies. Transferring every supply chain link domestically would be incredibly costly and require over a decade, with expenses far exceeding $1 trillion. Netizens have expressed that, in the past, mainland China's chip development lacked American technology and failed to meet standards. Another netizen spoke about the system and people involved in chip fabrication in China, mentioning the largest tech chip fraudster, Chen Jin, who was labeled by the Chinese government as a fraudster in scientific and technological innovation. But after the fraud was exposed and confirmed, he continued to work in the chip industry and at Shanghai Jiaotong University for over a decade. This raises doubts about China's commitment to technological and scientific innovation. Chen Jin was the former dean of the microelectronics school at Shanghai Jiaotong University. He was fired following the Hongshan chip fabrication scandal. On January 17, 2006, it was revealed that his team bought Motorola's Freescale 56800 chips from the US, erased the Motorola logo and trademarks with sandpaper, and then rebranded them as Hanshin No. 1, fraudulently obtaining 1.1 billion yuan in government research funding. Although the funds were later recovered, no legal action was taken against those responsible. Netizens also noted the prevalence of fraud and corruption in China's chip industry, with many companies existing solely to obtain subsidies. They cited the example of the so-called chip tycoon Cao Shan, who loudly proclaimed the development of 7-nanometer chips, but the project eventually fell through after receiving substantial subsidies, leaving behind a mess. Wuhan, Hongshin Semiconductor, also led by Cao Shan and claiming a total investment of 128 billion yuan for the production of 14-nanometer and later 7-nanometer chips by 2020, was a key project supported by Wuhan's state assets. However, the project also failed, with its lithography machines mortgaged to the banks. The netizen questioned why Cao Shan could take advantage of the system twice, suggesting deep-seated corruption in the industry. The Chinese government established the Big Fund for Chips to support domestic chip production. However, given the long return period of the chip industry, most companies would struggle to reach profitability without external funding. The Big Fund, marred by internal corruption, is battling fraud within the industry and facing blockades by Western countries led by the US, making it difficult for China's chip industry to develop. Cao Shan is actually a pseudonym. His real name is Bao Enbao, who only has a primary school education and claimed to be the chairman of Anhui Dianshuang Electronics. Since 2018, he established 6 chip companies, including Wuhan Hongshin, Chuhai Yixin, Hubei Tianxin, Jinan Transhin, Changjiang Yunkong, and Yunxin International. Following the U.S. imposition of the most stringent chip restrictions on the Chinese Communist Party to date in October last year, the measures were further escalated on October 17 this year. According to Reuters, the U.S. continued to expand its controls over the sale of Chinese chip products and the export of advanced chip manufacturing equipment, aiming to limit China's access to high-end GPUs that could facilitate AI breakthroughs or power supercomputers and military applications. U.S. Commerce Secretary Gina Raimondo stated that the new measures address loopholes in the regulations introduced last October and could be updated at least annually. Raimondo emphasized the need for vigilance against threats to national security, describing it as the biggest threat faced to date and that it is necessary to devise a response. The Pentagon's 2022 China Military Power Report indicated that since 2021, the CCP military began discussing a new core operational concept of multi-domain precision warfare, aiming to integrate big data and AI for precision strikes against U.S. military systems. The report identified AI as one of the priority areas for technological development by the CCP, considering it central to intelligent warfare. The CCP military could also use AI for cognitive domain operations, including disinformation campaigns, online public sentiment analysis, and operating bot networks on social media. On January 27 this year, the US, Japan, and the Netherlands reached a secret agreement in Washington, agreeing to expand chip export controls against the CCP. Japan and the Netherlands arranged to implement control measures independently. On March 8, the Dutch government announced plans to impose new restrictions on semiconductor chip technology exports, extending from the most advanced extreme ultraviolet lithography machines to the less advanced DUV lithography machines, to protect national security. These measures were expected to be introduced before the summer. On the same day, reports surfaced that a major Japanese photoresist manufacturer had already implemented U.S. entity list restrictions, discontinuing supplies of KrF photoresist to a memory fab in mainland China. Photoresist is a core material in semiconductor lithography, determining the precision and yield of semiconductor patterning processes. In September last year, the U.S. initiated the formation of the CHIPS 4 alliance, including Taiwan, South Korea, Japan, and the U.S., aiming to exclude the CCP from major semiconductor supply chains. As a member of the CHIPS 4 alliance, South Korea has not made a clear stance like Japan in following the U.S. strategy, appearing to balance between the U.S. and China. However, analysts believe South Korea will not deviate from the global technology system. UK-based investment consultant Fang Chi stated that semiconductors are a pillar industry for South Korea, and in the short term, U.S. sanctions against China's semiconductor sector have a significant impact on the South Korean economy due to its high dependency on exports to and production in China. U.S. sanctions have made it difficult for South Korean companies to maintain operations in China. The new U.S. rules restrict the export of advanced chips and related manufacturing equipment to China. According to the U.S. Foreign Direct Product Rule, any foreign-made goods based on U.S. technology or equipment are also subject to U.S. regulation. This means that South Korean companies in China will be unable to import advanced semiconductor equipment in the future, nor can they manufacture advanced chips for Chinese companies. These restrictions hinder the ability of South Korean semiconductor industries to continue their operations in China. Recently, South Korea and the Netherlands issued a joint statement forming a semiconductor alliance. According to the latest report by Yonhap News Agency, South Korean President Yoon Suk-yeol, during his visit to the Netherlands, issued a joint statement with Dutch Prime Minister Mark Rutte on December 13th. The statement contained 20 items, agreeing to work together to close the technological gap and address the supply chain crises. Accordingly, their foreign ministries will hold regular economic security dialogues. Additionally, their commerce departments will establish a dialogue mechanism to coordinate chip policies and establish a memorandum of understanding for cooperation on critical supply chains. Kim Tae-hyo, First Deputy Director of South Korea's National Security Office, stated at a press conference in Amsterdam on December 12th that South Korea and the Netherlands decided to strengthen normalized special cooperation in the semiconductor field. Both countries will work towards building an alliance capable of providing immediate and effective solutions during supply chain crises. Analysts suggest that with the implementation of U.S. sanctions and the push of demand by the AI boom, smaller Chinese semiconductor design companies are striving to secure sufficient advanced packaging services. Media reports say an increasing number of Chinese semiconductor design companies are using Malaysian companies to assemble some high-end chips, mitigating risks from the U.S. expansion of sanctions on China's chip industry. These companies ask Malaysian chip packaging factories to assist in assembling GPUs, believing that requesting only assembly without including wafer manufacturing does not violate any restrictions imposed by the U.S. so far. Insiders report that Unisem, a packaging and testing giant under China's Huatian Technology, and other Malaysian packaging and testing factories have seen a noticeable increase in business and inquiries from China. Analysts believe that the U.S. might take action against Malaysia's semiconductor industry for mitigating risks for Chinese chip packaging outsourcing, potentially making these areas in Malaysia targets for U.S. export restrictions against China.